Hey everyone, it's Gerald back at it again with another video. In this video, I'm going to do a deep dive onto United Health Group stock here, which just reported its Q4 2025 on January 27th in what seemingly seems to be a decent earnings. Earnings per share of $2.11, surpassing estimates of $2.09, with quarterly revenue of $113 billion, which is a 12.3% year-over-year increase. Despite that, the stock has dropped over 20% in the matter of a couple of days here. Looks like the stock has been hovering around the $287 area when the stock was once trading at $351. So a massive drop post earnings. I'm going to do a deep dive onto why the company fell down despite what seemingly seemed like a good quarter, which ultimately is due to guidance for the company. So I'll do a deep dive into the company's guidance, do a overall fundamental analysis on the company in terms of its intrinsic value, what hedge funds have been pricing the stock at, what Wall Street has been pricing the stock at for a 12-year return, as well as the dark pool data here. So looking at the company here, this is a dominant healthcare insurer, right? This is the United States #1 insurer, right? So this is a formidable market leader. But despite that, they are under a lot of regulatory pressure from the Trump and the federal government, and they have ultimately been proposing flat Medicare rates, right? So due to a lot of this pressure, the company has been finding ways or shifting its strategy to one of margin recovery as well as cost savings to address a lot of the margin pressure that's been going on in the company here. So the company has been shrinking its membership size intentionally to prioritize for that margin recovery and has been aggressively investing into artificial intelligence for the cost savings efficiency, which as a company of United Healthcare's size, utilizing AI is going to drive a lot of savings for this company here. But despite all of these different strategies aimed at margin recovery, 2026 looks to be a not so good year for this company in which they projected or guided for revenue contraction, which is the first revenue contraction for United Healthcare Group in over 3 decades, so over 30 years. I'm going to do a deep dive into whether the company's strong cash flows as well as Optum services are able to withstand a lot of this pressure and where I expect the stock to go on a technical basis here. So doing a deep dive onto United Health Group's earnings here. First and foremost, being a healthcare insurer, being that they are paid by the government, they are subject to a lot of pressure when these federal policies change, which Trump as an administration has been directly firing at UNH Group specifically, or healthcare as a whole here. So recent flat rate proposals for Medicare Advantage in 2027 has caused that massive stock volatility, which was that 20% drop in the stock most recently here, right? Right now, they are going through, once again, these are just proposals for this company here. So come April, there's going to be a lot more clarity around what's been going on. But despite that, the company already issued revenue contraction or guided for revenue contraction for the year here. The company's also undergoing a lot of Medicare ratio increases here. So people are using more healthcare service, which means the company's ultimately having to pay out more in claims, right? They had to pay more in healthcare services. So Medicare ratio rose significantly in 2025 to 89.1%, right? This is typically in the ballpark, I think around 80 to 85%, but ultimately with a Medicare ratio of 89.1%, only 11 cents of every premium dollar is left for overhead as well as for profit, right? So there's not much in terms of profit for this company. Ultimately a lot of pressure on the company's margins here. Ultimately too, the company's been going through membership contraction, right? The company has been intentionally drawing down membership because of the Medicare ratio here, but the company expects to lose over 2 million members in 2026 as it prioritizes profit over growth, right? So for the first time in decades, which was in reality about 3 decades, the company's forecasting a revenue decline. I think it's about 2% for this company here as they pull out of unprofitable markets and ultimately have to raise up their prices, their premiums for the insurances here. And lastly, ultimately, we touched on it, the Medicare Advantage program is being under a lot of scrutiny. Regulatory as well as the Trump administration has been guiding for ultimately flat margins, right? So flat rate proposals for Medicare Advantage in 2027 here. So that's going to be a true challenge for this company going forward for growth here. So enough of the weaknesses for this company. We've gone over it. There's been also a lot of opportunities for this company as well here. Massive efficiency gains expected from $1.5 billion in AI investment. This is likely going to draw huge cost savings for this company because, like I said, being a company of its sheer scale, there's a lot of efficiency issues that the company can pretty much deploy to really drive a lot of savings for this company here. They also are expanding of the value-based care models within the Optum Health division. Moving over patients into a fixed fee care plan can lead to higher, more predictable profits here. So a lot of this strategy is going to allow this company for longer term profits here. We are also in an aging silver tsunami population, which ultimately guarantees that long term demand. So this is that safe haven that a lot of people look at rather than being a consumer approach where a lot of talks about recession. This is a healthcare company that is likely going to be a safe haven if there's any talks about decrease in consumer spending, right? This is healthcare. Right. So 10,000 Americans turn 65 literally every day, which creates a massive growing pool of potential customers. And United Healthcare being the greatest of them all, likely going to be benefit for that. Right. They are also vertically integrated here. So they have a strategic shift toward high margin specialty pharmacy, as well as the Optum Rx services here. Pharmacy services are growing faster and often have better profit margins than traditional insurance. Optum Rx saw a 15% revenue growth in 2025, helping offset the weakness in the other areas, right? So by focusing on the complex specialty drugs, the company can drive significant earnings even if insurance enrollment stays flat, right? Which is ultimately what the company's been going through. And ultimately, with the current flat rate for 2027, this is just a proposal for the company. And because this is being proposed, like I said, because of a lot of uncertainty with the policies here, the stock doesn't like that, right? And ultimately, they price it in as in that is reality. The market is very short-term thinking. So if you're able to think past even 2027, this is going to be a big opportunity for those who are more longer-term investors here. So ultimately, if the final 2027 rates are higher than the currently feared just 0.09%, then the stock could see a massive relief rally, right? The stock is facing a lot of pressure because of that uncertainty of the rates being flat, right? That being said, if it is flat, that's going to place a lot of pressure into United Health Group. Whether or not that has been factored into the stock, that is likely why the stock has been drawn out by 20%, with potential movement lower in the short term if this flat rate proposal is likely to ensue here. So despite that, the intrinsic value of the company is sitting at around $430 here, which is offering about a 33% upside. Even less on a DCF calculation, but on a relative value, around $504 here. Wall Street has UNH sitting at roughly around 398, which is about a 38+% upside with a lowest downside target of around 198. This is covered by over 73 Wall Street analysts, so it is well covered with what seems to be decent margin of safety given its most recent drop here. Looking at the most popular hedge funds, I like to look at what the big funds have been doing here. When I see Ken Griffin, he added about 33%. And that being said, it's about 300 million, which is about 0.04% of his portfolio here. We also have Dodge and Cox here, which holds a $3.3 billion position into UNH, sitting at a price of around $255, and they added about 8%. So overall, I'm seeing some decent additions into the company, not high conviction adds in the most prior quarter, as we saw in the past with Warren Buffett and so forth. We also saw Ken Fisher here with a 1.81 billion, which added about 1% into the company here. Chris Davies as well. I mean, go back to Chris Davies here. Chris Davies added about 0.5%, holds 393 million of UNH stock here. And then I want to look at what the bearish thesis have been doing here. Looking at some of the reductions or even the exits of some big institutions, we have Israel Englander ultimately took profits and dropped his holdings by over 40% into the company. He holds about $62 million still into United Health Group. Jim Simons, who reduced it by roughly around 44%, has about $260 million into this company. George Soros, half of his position, only holds about $16 million into the stock now, as well as Paul Tudor Jones, who pretty much exited his position. John Overdeck pretty much exited his position, and David Tepper all exited their positions here. So pretty mixed reviews from the popular super investors. I'm seeing some who are enjoy some of the discounts that the company has been doing, but some, because of likely a lot of political policies that Trump has been touting for UNH, causing a lot of caution to the wind for United Health Group here. Looking at the insider buying for the past 3 to 6 months, there's been no significant buying. However, that 6 to 9 months ago, we had the big insider buys by Stephen Hemsley, who is now back at the helm of a $25 million buy there. He holds it roughly around $289 here. So the stock right now is sitting at right where he pretty much bought it, right? Or even under where he bought it at, 287. And even the great Warren Buffett here. So decent margin of safety from a standpoint of where Warren Buffett has it, and understanding that United Health Group CEO has pretty much bought it around the current price here. Once again, we really went over the revenue. The company reported 12% year-over-year revenue growth. This is a company with massive free cash flow of $17 billion with a 6.56% free cash flow yield. And of course, they have a share buyback program. Thing to note about, they are pausing their buyback program as of the most recent earnings because of what's been going on in the company from a margin compression standpoint here. Looking at the technicals of UNH on the daily time frame here, we have an RSI of 32.48. So ultimately right at the oversold area here, we are at the lower Bollinger Band, and we're just right under the golden retracement, which is sitting roughly around 50 to 61.8% retracement from the prior highs here. Of course, this company has levels lower towards the 78.6, sitting roughly around 265, as well as even 100% retracement, sitting roughly around $234 here. Looking at where we're sitting relative to the DCF as well as the intrinsic value, once again, the DCF is offering about a 17% margin of safety with an intrinsic value that's sitting around 40% away. So decent sizable margin of safety for the intrinsic value. The DCF value sitting only around 17%. So right now, stock is sitting at the lower Bollinger Band. We are in the oversold areas here. In the past couple of 3 days, we've been seeing a lot of bearish dark pool data here. Looking at the dark pool data for the past 4 days. 4 days ago, there was a lower aggression buy at around 20 million with no bearish print. We also had another $24 million buy the day after, as well as a 48.8 million aggressive buy, which was about 1.2% of the daily volume. And then as of the most recent trading day on Friday, there was an $114.8 million low aggression buy, nearly $200 million that were bought for the company. So about 5 to 6% of the daily volume here. So it looks like institutions are picking up this stock as it's sitting at a crucial area of demand here, sitting at where Stephen Hemsley has bought the stock, sitting below what Warren Buffett has it, sitting at the lower Bollinger Band as well as oversold on the stochastics. We are still firing bearish momentum on the MACD. So there's no confirmed reversal as of just yet. There's no weakening of bearish momentum. So I would issue a dollar cost average approach into the stock here. So ultimately, that is my take on United Health Group. I currently believe this stock is providing a decent margin of safety for a buy, sitting at a PE ratio of 15. It's trading significantly below its 5-year median of 24. Of course, there's a lot of pressure for this company for the time being, so I do expect demand levels lower, which, like I said, is sitting roughly around a 0.786 retracement, sitting roughly around 265, and even potentially back at a double bottom towards 235. Once again, this is a company that is projecting revenue decline for the year of 2026 here. So that being said, they could be sandbagging things as well as policies that are not yet proposed, are essentially just proposed for this company now rather than instituted, right? So a lot of it is just fear-based trading for the company right now. Whether or not flat rates are going to be continued for the company, that is to be seen here. So I'll keep you guys updated on any updates for United Health Group here. But as of the time being, it looks like not a bright year for United Health Group. I do think it's presenting a great opportunity for longer-term investors who can think past the 1-year mark here, which for me, as a value investor, any investment I get into the stocks to hold for the next 3 to 5 years to even a decade to hold for these companies here. For a 1-year contraction of revenue decline with a lot of pressure from the Trump administration, that is likely going to be a tailwind in the future, right? So for shorter term investors, be very wary as the company is facing a lot of pressure for the upcoming months, and more clarity is still to be provided come April here. So if you guys want me to analyze any other stock, drop them down in the comments below. Tell me what your thoughts are for UNH stock. Are you bullish for the stock? Do you think come April that rates are going to be flat? Leave them down in the comments below. And as always, happy trading.